And joining me right now on the video is Dan and Edward from Hummingbird Resources. It's been a busy week, guys, and lots of news to talk through. In particular, the announcement of a strategic investment and placement update and notice of general meeting. And we'll also be looking through an outlook and how things are going generally. But let's start with that strategic investment and placement update and the notice of general meeting release. Can you provide the key updates on this, reasoning for the placement and other important information investors should know about, please, guys?
Well, first of all, Justin, thanks for having us on again. Good to see you. I'm going to let Monty answer that question first up, and then I'll add a bit of colour afterwards.
Yes, thank you, Justin. So we had the release out this week. It's quite detailed, and the circular is on the website. I'll just highlight a few of the key points from the announcement. So further to the company's announcement on the 7th of February of the strategic investment of $15 million by CIG, we've also confirming an additional conditional subscription of about 1.4 million from certain existing institutional shareholders, which we're calling the subscribers. We're also providing the opportunity for existing shareholders to subscribe in an open offer of up to 2.4 million or 2 million sterling. The placement amount, if the CIG investment, the subscription, and the open offer are all taken up, would be a proceeds of around $19 million US. The price that's going to be done at is going to be at 7.79 pence per new ordinary share. In particular, we note that the use of funds, the placement will be used to strengthen the company's balance sheet, improve liquidity, to ensure that the company brings its second gold mine, Kouroussa, into production as scheduled by the end of Q2 2023. That's the key priority of this placement, but also subsequent funds to help fast track exploration at that asset, which we deem important. There is a notice of general meeting. The second tranche of the CIG investment subscription, the open offer, are subject to shareholder approval, and a general meeting will be held at 1 p.m. on the 13th of March, details of which are in their circular and the release. We would note that the subscription and the open offer are each conditional on the approval of shareholders for the second tranche of the CIG investment. We have had strong endorsement from existing, in particular, institutional shareholders of circa 16.83% for the resolution. They're the key points. I would urge you, if you have any more detail you want, the circular is on the website, and I'll hand it to Dan to give a bit more colour about this announcement.
Thanks, Monty. I'd just like to touch on a few of the issues around why we came to the decision to do this placement. Obviously, dilution is always an issue, and people are concerned when you have dilution in a company. I think I'd just like to take a moment to sort of back up on where Hummingbird's been the last 18 months. Obviously, Yanfolila underperformed in the first 9 months of last year, and that's a well-advertised fact. And we were always planning to build Kouroussa through debt, a debt facility from Coris Bank, and internal cash flows. And unfortunately, those cash flows didn't materialize as much as we had hoped, but that's a well-advertised fact. As it happens, Yanfolila has now, and we'll come on to that later in this interview, it's improved a great deal in the last 4 or 5 months, and operations are going smoothly at Yanfolila. But the reality is cash flow is tight, and there's a lot of risks. At the end of the day, since we started in Kouroussa, we've operated through 3 military coup d'etats, COVID, inflation that is rampant and out of control, and yet we are still on track and on budget to build Kouroussa as we promised, which I personally think is an absolutely remarkable achievement. And we've done that under the pressures of Yanfolila performing badly. There are also other pressures on Hummingbird, such as cash flow issues exacerbated by VAT delays coming back from the government of Mali and government of Guinea. All of these things create risk. And what we're trying to do with this investment is eliminate risk, because the worst thing that could happen is we delay the project. And Kouroussa is at a pivotal moment. And the worst possible thing we could do is have a hiccup and run out of money from a cash flow issue. So that is really those are the ingredients that have led us as a team and a board to take this strategic investment. And then I should really say a little bit more about what I mean by a strategic investment. It's not just a placement. It is a strategic investment from a partner who we've worked with and trust and will help us build a mining company with Hummingbird that has been our ambition for years. So CIG Group is a private investment group with strong strategic links to Coris Bank, and it's through that relationship that we've got to know CIG Group, and it's obviously through that relationship that the strategic influence will be played. So I personally think it's an absolutely phenomenal result for Hummingbird to secure such a trusted, strong strategic investor and to set us up not just for immediate success and the transformational event of bringing Carusa, our second mine, on stream, but future growth and future support. So personally, I'm extremely happy with this development. I would say, as Monty said, I just echo, our institutional shareholders and larger shareholders have all supported the vote. They have supported the investment. They all think it's great, following their money where they can. And the open offer that we are doing is purely to offer all shareholders equal participation in this placement where we can, so that they don't feel neglected or left out, or that the decisions are being made without respect to them. It's always difficult to get it right. If you do an open offer, some people say, oh, look, they look desperate, they need the money. It's not that we need the money from the open offer, it's that we want to be respectful to all shareholders equally. That said, obviously, any money we get from the open offer will be used responsibly, fast-tracking exploration and making sure that the balance sheet is strong and that we can deliver on our promises. So that's probably quite a long-winded way of explaining a lot of the risks that came into this decision, but hopefully it's clear that I think it was needed, but also it's extremely valuable for the company. That's my explanation.
Yeah, well, it is important, but like you say, it ensures, getting Carusa into production in Q2, and you mentioned there's a transformational asset there. So take us through, if you could, some of the key updates on that asset, if you could, Darren, Ed.
Yeah, sure. So at the moment, Justin, I mean, you're absolutely right. Carusa is full steam ahead. We've got over 1,000 people on site, countless contractors. The contract miner is mobilizing. All the civil engineering's going in, finalizing steelworks, E&I, piping, finishing off catering, the reagent blocks. I mean, it's just the power station. Everywhere you look is a hive of activity. All of these people are dependent on us to meet our promises and pay them on time, which we've done. We haven't missed any payments and everything is absolutely fine. But the risk to the project, if you were to miss one of those payments, is, I think catastrophic is a pretty melodramatic word, but the risks are huge. If you delay a project, you can't just restart it in a month. It has a hugely exaggerated effect on the timeline and the cost. So absolutely the priority has to be to get the project finished on time and on budget, which it is, which, as I said at the start, I think is an absolutely remarkable achievement at this stage.
Mm-hmm. Okay, well, let's turn to sort of Yanfolila in Mali then. Solid end to 2022, producing over 28,000 ounces. Details have been given in your Q2 2022-23 outlook statement early February. Can you talk us through those, and in particular, your expectations for 2023? Yeah,
sure. I mean, I'd rather not relive 2022 in too much detail. I think I've sort of been there many times, and the first part of the year was extremely difficult for a huge number of reasons. And it's been a monumental effort by the team to turn those around. And I'm really extremely proud of the team for working in very difficult circumstances to achieve that. But in Q4, 28,000 ounces at just under 1250 AISC is a remarkable turnaround, really. And that has been achieved largely by changes in the senior management at Yanfolila, a new GM at site, and a lot of rationalization in the mining process and getting the mining volumes and working with the contract miner. That has been a huge challenge to get productivity where it needs to be. Those issues with the mining fleet are not totally resolved, but we are so much closer to having an operating platform that we can rely on than we were at the beginning of 2022. I think Q1 has started extremely well. January we've carried on exactly as we finished in Q4, and operations are smoother and everything is more reliable. But I think looking forward, At the moment we're mining in Kamana East, which has always been our most reliable and trustworthy ore body. We are looking to take Kamana East underground, which I believe will be a long-term source of reliable, decent grade to the mill. But there's no doubt once you get out of Kamana East, the other deposits in the Yamfulila mine have caused us issues over the years, and they're more troublesome. So I think our mines are set around slightly rescoping the Yamfulila mine to take some of the cost out, reduce the expat headcount, which has already happened, and right size it for an underground mine supported by some open pit material. But I think if you go back 5 years when we started, we imagined at this stage it would be an open pit mine with some extra resources from the underground. I think really our thinking has sort of done a slight U-turn there, thinking the main source of ore will come from the underground, and it will be probably a smaller mine going forward, but a mine that should endure for many, many years. And the key is making sure it is a profitable mine that contributes positive EBITDA. And if you can deliver on that, hopefully people will start to see you've got a very steady, reliable source of profitability at Yamfulila. Hugely exciting prospect at Kouroussa, and with a strategic partner, a platform to go and grow a gold business.
Yeah. Okay.
I might just sort of interject there in terms of we've got another slide that Dan's talking about our outlook, which I can run through here. This slide was in our recent corporate update deck. It's really more of an illustrative production profile for the company. We have guided for the Yamfulila mine to produce 80 to 90,000 ounces at less than 1,500 AISC, and as Dan says, we're on track. We're on track for a good start to the year. I would just highlight that the charts for 23 and 24 for Kouroussa are estimates only. They're not our guidance. But Dan did talk about Kouroussa coming online as scheduled. This is a mine that once in full run rate should be doing 120, 140,000 ounces. So we're confident of getting to that 200,000 ounce production per annum run rate for 2024. In terms of AISC, obviously, with the high grade asset that Kouroussa is, over 4 grams a ton, AISC will come down as it starts to increase its run rate. So we've said in our release that we did on for Q4 2022 and our 23 outlook that we would come back to the market with an updated group production guidance update once Kouroussa is into production and ramping up. I would expect that the best time to probably do that would be at our Q2 results, which are generally the third week following the end of quarter. So you should expect that in July. So I'll talk about news flow in a minute, but in terms of projection, this is what this sort of chart's trying to highlight. We have an organic growth profile, which is going to take us to that 200,000 ounce production profile.
Yeah. Okay. So let's turn to your other asset then, Doobie in Liberia, and Pasofino, who's your joint venture there, of course, by the way, listed on the Toronto Exchange. Their share price is doing very well at the moment. But give us, listeners, a bit of background and update on Doobie.
Well, Pasofino's share price, Justin, and it is worth noting that Pasofino's $40 million Canadian company, and what we should clarify is the ownership structure, because there's been some confusion around that. And Hummingbird remains a 51% controlling shareholder of the Doobie asset. And Pasofino have exercised, we had a two-way option to roll that up into Pasofino. And what that means is Hummingbird, rather than owning 51% of the asset, will own 51% of Pasofino, which will own 100% of the asset. So whichever way you look at it, Hummingbird is the majority shareholder and controlling party of the Doobie asset. And half of that asset is worth 40 million Canadian dollars. So if you look at that in the context of Hummingbird's market cap with Yamfulila and Kouroussa, 200,000 ounces of gold, 2 mines, multi-jurisdictional asset, I think that Hummingbird rightly has been valued on weak performance in the last 2 years. But I think what that does is create huge optionality from here. I mean, it's effectively, the share price effectively, to me, seems to be an option on us not funding Kouroussa and running out of money. And hopefully this news today is proof that that's extremely unlikely to happen. So I think, to give a bit of context, that shows Hummingbird in a good light. Pasofino has taken on RBC with a mandate to do a strategic review of the asset and essentially to see how they can maximize value from that. If you back up a year ago, when we started looking at ways to maximize value from Doobie, we were obviously 100% focused on Carusa, how to manage our cash flows, and if there had been an offer to buy Doobie, we would have probably been very inclined to take that offer because we'd have, those cash resources we'd have received would have been very good in building Carusa. As it is, the game's changed a bit because we're imminently about to bring Carusa into production and hopefully be in a much stronger position in terms of internal cash flows and balance sheets. So we are entering this process as absolutely partners with Pasofino, supportive of the process. Hopefully there'll be some strong interest, and we've spoken to people who do have interest in the asset, but we're not forced sellers, for want of another word. We're pretty open-minded, and we can make sure that we can extract full value for all of our shareholders.
Yeah. Do you know what? You've got a lot going on there. So I think what you should do is, if you could run through some expected sort of key news flows, things that investors can look out for in next few months, next year or so.
Yeah, I can handle that. We've got a slide in here. Well, we'll go through each of the assets. As you said, we've got a lot going on, but I would say, just to start off with, in terms of what we're going to be doing this year in terms of the marketing and interaction with investors, what I would like to be doing is, I suppose, less releases, but more, I suppose, marketing and interacting with investors around those releases. Like this, what we're doing. We're also cognizant to do more live events. I think the timing to do that would be on the back of our group update from Carusa. So on the back of our quarterly 2 results, accompanied with each investor or with Vox, with the ability for investors to send in questions. But also I will be on the front foot, as will Dan, doing conferences. We were just in Indaba. I would say just in general, the vibe down there has lifted over the last 12 months, just in generally, and we've had a lot more engagement with Hummingbird with the meetings we had, and I'm going to be doing a lot more conferences. So I just wanted to sort of flag that firstly. But in terms of general news flow, I mean, for Carusa, the key news flow item expecting would be the first gold pour. As we say, we're still on track, on schedule for that for end of Q2. Again, once I've said already, we'll have an update on group-wide guidance update for production, likely with the Q2 result. And then also we'd like to obviously do some more drilling, and we expect to sort of some drilling results, hopefully, for the second half. For Yangtze, I think it's really around the quarterly results, making sure we're consistently delivering on those. As you said, we've had a good start to the year. Q1 will come out in April, likely the 3rd week of April. We do get questions about why we can't put a more definitive timeline in terms of when we do these releases. I am aware of that, but you should expect roughly the 3rd week of each month following the quarter. And we have guided to that 80 to 90,000 ounce, less than 1,500 AISC range. So we're confident on that, given the start we've had. And as also Dan said, we've got the Carusa underground mine coming in. So you should expect further updates on that, and we'll keep the market informed at our quarterly results. In terms of Doobie, obviously there's a strategic review underway, which Dan went through. I think the news flow on that will be once something more material happens. And also, I think what we're going to do is a few more drone footages around Carusa, imagery. So hopefully we can be a bit more active this year, and also be on the front foot in terms of the messaging and the conferences that we're going to be going to.
Yeah. Okay. Well, it's a comprehensive update. A reminder to viewers, you can download that presentation on the website there. But before we go, Dan, any further points you want to make and some closing comments?
Yeah, no, a few things to summarize. Just one quick correction there. Monty accidentally said the Carusa underground. He meant the Kamana East underground at Yamfila, but just in case people got carried away, Carusa is definitely open pit. No, there's a few things just to summarize, Justin. I mean, I guess we're a little bit bored of beating ourselves up at Hummingbird. It's been a difficult couple of years, and that's been exhausting for shareholders as well as for us. And we're very mindful of that fact. But I think we should just take our head up above the parapet a little bit and actually take some pride in what we've achieved. It is an extremely difficult environment we operate in. We're running projects in Liberia, Guinea, Mali. We have run through COVID, through rampant inflation, through all sorts of logistical challenges, and we have imminently built a second mine on time and on budget that will be transformational for the company. So I think we should really take some pride in that and look forward with excitement. I think it's a really exciting moment for Hummingbird. And I think this strategic investment by CIG Group is not only a massive endorsement, it's a massive opportunity for us to go and capitalize on that opportunity. To summarize just a couple of actual specific actions that are ongoing. I mean, obviously this placement for CIG Group shores up the balance sheet and should give all stakeholders comfort that Kouroussa is on track, on budget, and is going to happen imminently. It's obviously a hugely important event that will turn Hummingbird into a multi-mine, multi-jurisdictional producer, 200,000 ounce of production. If you actually think about that, it's over $400 million of revenue we're looking to generate. A company that will employ over 2,000 people, and it will have net assets on the balance sheet of nearly $400 million. It's easy to be myopic and just look at the share price and look at the share performance and not look at the value. The value in Hummingbird is amazing right now, and that's what I need to get across to the market, and we need to showcase that better as a team. But I think other things we want to do this year, Justin, we really need to get exploration going at Kouroussa. There's a huge gold endowment in that system. We've obviously been focused on building the project and capital control, but it's a short mine life, and we need to get going on exploration, and we need to develop those resources and reserves to extend the mine life. That's a priority for this year. And we also want to develop our ESG and particularly our single mine origin initiatives, which I think are a differentiator for Hummingbird to showcase some of the fantastic community and health work we're doing on the ground. Obviously, Doobie, we'll see how that process goes, but there's a fantastic optionality there as well. So, as you said earlier, there's a lot going on. Everyone's extremely busy. It's a crucial time for the company, but I think actually a very exciting time. And finally, I'd just like to comment on the governance side of Hummingbird. And obviously, at the last AGM, I took on the role of interim chairman. I mean, if I'm honest, it's not been the best time to seduce a suitable chairman into the role that we want. You know, somebody that can really lead Hummingbird into the growth and the future that we want. But I think actually, as I've talked to just now, that's changing, and discussions are ongoing, and hopefully we will have some development in that regard soon. It's not been forgotten. Thank you very much.
Yeah, well, thanks, Dan. Thanks, Ed. No, it's been very hard. I mean, for lots of investors, and not just about Hummingbird, but generally, like you said, if you look what we've been through over the last few years, we've gone through a pandemic, you know, rampant inflation, and then a bear market for 18 months. So, and we know, you know, generally looking at the averages of bear markets, we're pretty much coming towards the end of it. And you guys seem to be making steady progress going forward, and hopefully that'll pay, you know, dividends with the share price rising the next few months. But guys, thanks for the update, and hopefully we'll catch up in the not too distant future. Thanks very much.
Thanks a lot.
Thank you, Justin.